Hello and welcome to this edition of Money's Best Friend with me, Vivek Law. The Reserve Bank of India has delivered the good news by cutting interest rates sharply by an unexpected 0.5 percentage point. If banks do pass this rate cut down to consumers, then you could see your home, car and education loan EMIs coming down. With the festive season in full flow, one of the sectors which has not been taking off and could be cheering the rate cuts is the real estate sector. There are discounts galore. Should you take the bait? Today on Money's Best Friend, we discuss whether you should invest in real estate this festive season. Most people wait for the festive season to avail various discounts, especially when it comes to real estate. To encourage people to buy, builders have been coming out with various schemes and even negotiating prices with potential buyers. Developers also see this period as the best time to launch new projects. Let's see the special report on real estate and festive season offers.
According to the data from a recent report, only 29% real estate projects in Delhi NCR were on schedule in June this year. With festivities around the corner and people willing to indulge, having unsold inventory in a time of high demand can be good and bad. Let's find out if it's the right time to buy a house.
I would suggest that it is the right time to buy the property for all the people who are looking out for buying the house for their own, whether it is 2-bedroom or 3-bedroom, because right now the prices are at the rock bottom stage and no customer will get a better price than this.
With sales slowing this year, developers offer a variety of schemes to encourage buying. Here are some of the most popular schemes developers offer to attract customers. Subvention schemes. These are part payment schemes that involve three parties: the buyer, the seller and the bank. The buyer pays anything between 5 to 30% and the rest is loaned out by the bank to the developer as construction progresses. Under such schemes, the developer has to pay EMI until possession or for a pre-decided period. This works best for those who want to pay rent. It saves the burden of EMI as well as rent. As inviting as this scheme is, it has its own risk. Problem arises if the developer delays the project. Cost is at least 10% higher. Default by a builder impacts your credit history. Low interest rate schemes. Another offer developers put out is lowered interest rates. Basically, the developer offers a low interest rate for a few years by paying part of the loan. How it works is, you buy a house at a certain interest rate. Your developer reimburses the interest differential. This works if you give proof of interest paid. This offer also comes with its own set of risks. You will have to pay full interest to the bank. The interest differential is reimbursed by the developer. If the developer fails, resolve the issue on your own. Guaranteed rentals. In this type of scheme, the developer offers guaranteed income either until possession or after possession. This is for those who want to invest in income-generated assets. What the developer does is, he or she gives rental income, the tenure of which is usually fixed. So what are the risks involved in something so fairly simple? There is no guarantee on payments. The builder can default. Discounts are often disguised. Experts say market dynamics will prevent a rise sharp in the prices, making it a good time to invest in real estate, as long as you are not looking for quick returns.
To discuss more on whether the festive season will bring cheer to the real estate market or not, Mudassir Zaidi, National Director, Residential Agency at Knight Frank, is joining me now. Thanks very much, Mudassir. How different is this festive season from last year? This is a sector which seems to be not coming out of its slumber, so to speak.
You're right, absolutely, Vivek. We're all expecting this festive season to be more cheerful than the last festive season. We had actually come out with a report a couple of months ago, which actually looked at data for the first 6 months of the year, from Jan to June 2015, as compared to what happened in the 6 months before that. So, which was the festive season of the last year. Generally, festive seasons, or basically the second half of the year, is always better than the first half of the year. But surprisingly, we found out that the first half of the year, of this year currently, was better than the last half. So therefore, we're all expecting that the recovery has begun. We are expecting that the bottoming out of the entire slowdown has happened, and we are now all expecting that the overall numbers would be far better. So this festive season will definitely be better. RBI's action of cutting down the rate by about 50 basis points will always will cheer up the investors. We're expecting that people will be far more will actually open up to buy to take these decisions, and definitely it will have a positive impact on the sentiments.
So you believe that there could be a pickup with this rate cut?
See, there are multiple factors that overall affect sentiments and actually eventually the volume of sales. Interest rates are certainly one reason why people, obviously your cost of acquisition is affected by your interest rates. A 50 basis point cut is definitely a good reason. It's a good start, I would say, but I don't expect 50 basis points to be enough to really bring out the recovery and bring out the sector from the slowdown. It's a good start. We're expecting another, I would say, if another 50 basis points come about, then I would definitely feel that yes, it would be a very, very good reason for a person to look at. However, other reasons like GDP growth rates and overall, in terms of people's, business confidence in the, in the overall thing, people's confidence in their jobs, etc., that has to go up substantially before people's sentiments start going up significantly.
The big question on everyone's mind, Mudassir, is that have we seen the bottom? Because for the last 2 years, there were a lot of investors or home buyers who were waiting in the belief that prices could go down further. Do you see that happening now? Because there would be some demand that would come in thanks to these rate cuts, and banks have already started passing on not as much as 50 basis points, but at least some of them have gone up even all the way to 40 basis points. So those who've been sitting on the fence waiting that prices will actually go down further, do you think that is now less likely to happen?
See, my opinion is that the bottoming out has already happened. I don't expect prices to go down significantly lower. There could be various micro markets where you have an outlier, but as a general sense, I don't expect prices to fall further significantly. My sense is in today's times, there is, in terms of the availability of offers, availability of deals, availability of discounts, I definitely feel this is the best time to buy. From a point of view of developers making good inventory available, making it available at the best best prices, in terms of the payment plans, etc. Overall, as a package, a great time to buy. Certainly in terms of the returns, etc., it might take longer for great returns to come about, but if somebody is looking at it for a self-use purchase as an end user, for him it's the cost of acquisition that really matters. I mean, for him, the lowest for him is the best time to buy. So I think this is a time like that.
And do you believe that the kind of discounts or negotiations or offers that we are seeing are more genuine this time? Because many times these freebies just end up having so much in the fine print that they actually are not what they come across to be. But is the situation different? Because developers are on the back foot, isn't it? They're sitting on, as some of your research has pointed out, on huge amounts of inventory, and they want to get rid of that. So is this a time where the consumer, and I'm using the word consumer because you said, the end home buyer, is actually king and can actually negotiate and bring prices down, even though the price which is officially announced may not have lowered, so to speak?
I would agree to that. Developers are definitely on the back foot. Many of them obviously want to get off the inventory of their books. They want to get their cash flows going. They want to move on to the next project. Many of them are giving very, very genuinely very, very good offers, I would say. In terms, if I analyze and evaluate various offers in the market, there could be offers like where they're giving off freebies, or they're reducing costs which are generally chargeable. So they will, for example, they might make registration free, so it could be a benefit of anywhere between 5 to 7% depending on the region one belongs to. There could be things like where they take away car parking costs, or they can take away club charges, or they'll reduce floor rises, or in terms of preferred location charges, etc. That definitely brings down the overall cost of acquisition. In normal times, one would have paid that over and above BSP. So that's one kind of reduction that certainly people can actually evaluate that and see that for themselves, that yes, there has been a decent reduction in terms of cost of acquisition. Apart from that, there could be schemes like, in terms of payment plans. There could be 80-20 schemes, there could be 25-75 schemes, there could be tailor-made schemes depending on your requirements overall. But there one needs to really go and actually analyze what kind of schemes one is getting. There could be subvention schemes. That's something which is a grey area. One needs to look at that very, very closely. Generally what happens is, and this has been there for the last couple of years overall, a lot of developers come out with these 80-20 schemes where and what a subvention means basically is that the consumer has to take a loan from a financial institution, and basically the developer keeps getting funding from the institution for completing the project. So on one side, yes, it is a good story because a good situation, because that money is being given to the developer. The developer is actually utilizing that for constructing and completing the project. So that reduces the risk on the project. However, the risk of the particular loan is on the consumer. In case, God forbid, the developer does not complete it for whatever reason, then the consumer still has to pay back the loan. Sometimes what happens is the developer loads the cost of the subvention. So for 3 years, if you don't pay that EMI, the bank is still charging you interest on that, or still charging the developer interest on it. So that's one type of scheme which is available, which needs to be looked at closely. However, a lot of developers now are looking at deferred payment plans as well, or possession linked plans as it called in some markets, where you genuinely don't have to take any credit on that, and the developer is just taking about 20% or 25% or whatever is the payment plan, and a large part of the money is actually taken on possession. So that becomes safer from one aspect, yes, that the risk of that the money at risk is only 20-25%, and if the possession does not happen, that's the only amount that is at risk.
Right. Some questions also coming in for you, Mudassir. Khushbu Sharma is now joining us on the line. Hi, Khushbu.
Hi, sir. Yes, sir, I'm calling from Pune, and my question is, I'm newly married and I have not invested anywhere till now. And I want to invest 70 lakh rupees in property. And right now we are staying at a rented house, so one property. Please suggest, is this the right time to invest, or should I wait for some more time?
So when you say invest, are you saying that you want to buy this property to stay in it? Is this for your own use, or are you buying it to sell it at a later point from an investment point of view, Khushbu?
No, for my own use.
For your own use, right? Yeah. Any particular part of Pune you like?
Biman Nagar.
Okay, Biman Nagar. You've heard the budget, very clear that this is for end use, and as you said, this is the right time to buy if it's for your end use. Biman Nagar she likes. Is she going to get something, and could you advise on one? See,
I think definitely Pune as a market is still quite affordable, and there are a number of projects available in Biman Nagar which could be in that budget as well. And I've already said this pretty clearly that this is the best time to buy. I don't expect prices to fall any further. I definitely, and since she's actually looking at buying it for self-use, and she's not really looking at the returns coming in, for her the cost of acquisition is what really matters. In today's time, she can really drive a good bargain, and definitely she should go for buying something immediately.
All right, Khushbu, right time to buy. Go out there. You will get something good in Biman Nagar. All right. Thank you very much, Mudassir, for joining us as well and taking some of the questions of our viewers.
Thank you.
Law. Joining me now is Ankur Dhawan, Chief Business Officer at PropTiger.com. Thanks very much, Ankur, for joining us here.
Thank you.
We've seen a big sharp cut coming in from the Reserve Bank of India, quite unexpected. One of the biggest beneficiaries of that is actually those who have a home loan, isn't it? Are you seeing some kind of a pickup in the market? Because for the last 2 or 3 years, it's been fairly flat and the demand hasn't really been there. How are you looking at the real estate market right now?
So true. So the rate cut has been a surprise, and we call it Diwali Dhamaka. People were just waiting for this kind of surprise cut or this kind of cut for a long time. The real estate industry have been clamoring in all the budget requests which they have been making that reduce the home loan rate. So it's a positive news for the industry, but it's just a very recent phenomena. I think we'll have to wait for some time to see how it impacts the demand. But if I take example like some of the deals which we were doing and people were not able to buy because they could not afford the home because of the rates which were there. So if you reduce the home loan rate by 40 bips, which the SBI has already done, it improves the ability of a person to take a home loan of a larger amount, which increases by 1 to 2 lakh. So deal which were just getting stuck because the person could not afford a 2 lakh more to buy a property will find it sweeter now, and they will be able to buy those properties. So that way we expect the demand to improve and a lot more properties to go to sell.
And are you seeing a lot of discounts, genuine discounts, and good negotiation, bargaining tools out there?
Yes, so in terms of the negotiation, I think this is the best time if somebody is looking to buy a property. I have not seen this kind of time when the builders is willing to sit on a table and negotiate a price. Every market is now right now giving a negotiation. If you go to Mumbai, you can get up to 5%. If you go to Pune, 3 to 4% is easily available. NCR is anyway, we know that this market has got a lot of discounting which is happening. It can go up to 10 to 12%.
10 to 12%.
Just coming this way, this particular show, I just overheard some developer is willing to give 33% discount, which sounds now the genuineness
must
of
be
this
in a lot of
discount,
trouble, that means, because there's a lot of inventory pile up, isn't it?
Completely, yeah. So this is what is happening. The developers have got too many inventory.
But you're saying that even if you go to a good developer, between 10 to 15% is what you can
easily negotiable. All of them are willing to discount right now. So discounts are there. I think is the right time to buy property. If you are an investor looking to buy a home from a developer, you should go and start discussing with developer once you like a property, and you can get a good discount. Going forward, I don't see this opportunity to coming back, because if you see the way the things are going, I think the infrastructure will develop, there are a lot more FDI coming to the market, home loan rates have come down, economy will revive. So prices will start moving up, and developers will obviously have some more breadth to negotiate, and they will not be able to give this kind of discount which they're giving right now. So I think this is the best time for anybody who is serious about buying a property and sitting on the fringes just waiting for those queues. This is the best queue you can get. You should look at now buying a property.
All right, it's time to take some of our viewers' queries. Bhuvana joins us now on the line. Bhuvana?
Yeah. This is Bhuvana calling from Chennai.
Yes. What is your question for us today? What would you like to know?
Yeah. Actually, me and my husband, aged 40 and 47 respectively,
Yes.
are planning to quit our jobs. We own an independent bungalow in the heart of the city at Chennai, valued at 8 to 10 crores since the market is down now. We have other rental and FD earnings, but not enough to meet our lifestyle.
Right.
So we have medical insurance for the family and term plans for our 2 kids aged 15 and 9 years. Okay. So my question is it better to rent the bungalow to corporates for higher liquidity and plan to sell after 3 to 5 years since the market is slow now, or still try to sell it at a satisfactory price now itself?
Okay. Very good question, Bhuvana. Let's get Ankur to answer that for you.
As I understand, it's the heart of the Chennai. So if you look at the Chennai market, I think heart of Chennai is already mature enough. I don't see a property price increasing queue unless this particular location has got something coming up as a metro or the outer ring road which is close to this location. I do not see a price appreciating by a huge margin, 8 to 10% kind of thing. So yes, then in that case you should look at liquidating this asset if you are looking for a liquidity right now. Now between rent and the other question which she asked, whether she should sell or not, that is a little more of a financial calculation which you should do. First of all, when you hear the price of the property 8 to 10 crore, you know that this is an HNI property. A normal individual will not buy like this property, and it takes at least 6 months for a normal property to sell. So I'll give it a 10 to 12 months of the timeline which she should look at before she can liquidate. Rental is an easy thing. Leasing can happen between 3 to 4 months. So that's a time thing which she should consider. Second part, we should consider that the kind of liquidity she can get. So if she is able to sell, let's say, property of for 10 crore, which she is mentioning as a price, she will at least get 8 to 6, let's say 7 crore as a month final after giving out the taxes and the whatever brokerage fees and etc. So even if she is able to get 7 crore, so she can put it in the FD and she can get at least 70 lakh a month annual income. Paying after taxes will be still, I'll say, around, you will get 40 to 50 lakh annual income. If you consider it for rental, I can just guess it. I don't know exact location, but I can guess she can get more than 2.5 to 3 lakh per month kind of the rental. And then there will be maintenance costs. So if you do a calculation, I think you will be able to make at max 24 lakh on an annual income. So that is whether you have to do the calculation, whether you are happy with the 24 lakh annual income, this is meeting your expenses. Are you really want to be in the leasing business to a corporate, because that requires a lot more time and dedication from a person who is 40 to 45 age and looking to quit a job and take life easy. So overall thinking, I think doing the financial calculation, I will recommend she to put her property on block.
Cool. Thank you very much for joining us here on Money's Best Friend. It's time now to wrap up this edition of Money's Best Friend. If you have any query related to equity, mutual funds, insurance, real estate, gold, then do write into us at moneysbestfriend@aajtak.com. Goodbye and have a lovely weekend.